Hello traders, good day to you all. Today is the 9th of December 2013. This is Tom Willis from Opteck and this is the daily market review for the current market status. As always, Mondays are suffering from low amount of liquidity. Let's go to today's calendar. And as you can see, generally we had some announcements on Sunday, but let's deal with today's situation. We've got a very important announcement from the Bank of England. We've got a speech over there, and we've got another announcement in the US market from the FOMC member of Seth Lewis. And he will talk about different issues regarding the economy, the monetary policy, and stuff like that. And we do expect to see some liquidity driven into the market during the US markets time frame. As you can see, generally today we had a very quiet morning, although the Japanese yen lost strength during the Asian market time frame, which gave strength to the European session. At the moment, we're expecting to see the US market getting into the market. Let's see what it will deliver. Just to give you a small explanation about what we had last week, we had an announcement regarding the non-farm payroll. Let's go back to the 6th. Okay, so we had an announcement regarding the non-farm payroll. We had a good announcement. We saw the indices in the United States climbing up above 1%, which is an enormous uptrend after a bit of weakness that we had for the last several weeks. And that should add some strength to this current week. Although we're approaching the holidays in the United States, we do expect to see a bit more uptrend, a bit more strength on behalf of the US market, and we can definitely use that amount of liquidity during our trading. We do expect to see low liquidity during the Christmas time. But until then, we've got some trading sessions, and I'm sure that we'll be able to use them. So again, generally today we had a very quiet morning, but we do expect to see liquidity driven into the market later on. At the moment, I will analyze the perspective of the pound and the perspective of the dollar itself, seeing potential. Just to show you something, I gave a prediction for the dollar index. My analysis, according to the structure of the dollar index, is that we will see a bit more downtrend before the dollar will climb up. And just for now, the dollar went lower a bit. It's approximately around the 80.2. I do expect to see a bit more weakness, and that will be delivered. I think that will be delivered from the announcement that we've got today. But generally, as I'm always saying, the perspective, I've been saying that for the last several weeks, my perspective is that the dollar should gain strength in the market, but we will see the dollar gaining strength once it will break several trend lines along the way. I will mark the trend lines when we'll analyze the dollar index today. So let's go to the charts themselves. Okay, so we went over the different announcements. Let's see what we've got on the charts today. We've got, as I said, a bit of weakness on behalf of the Japanese yen. We can see that all the currencies are gaining strength in front of the Japanese yen. The Japanese yen is the weakest currency at the moment. Just one second. Okay, so we can say that the Swiss franc is the strongest currency at the moment. The euro and the pound are next, and we can say that generally the market is pretty equivalent in terms of strength and weakness, just that the Japanese yen and the Australian dollar are the weakest currencies in the market at the moment. If I would if I need to use a specific group of strong currencies in front of weak currencies, I would choose the Swiss franc, euro, and pound in front of the Japanese yen and the Australian dollar. They possess the largest probability of producing a profitable trade. So let's go to the on-demand instruments. On the on-demand instruments, we can see that we had a good trade on the Australian dollar versus the New Zealand for a downtrend movement that occurred for approximately 45 minutes. A great trend to catch for a downtrend movement. Another good trade that we had is the expression of the stronger euro in front of the Australian dollar. As you can see, a nice trend line over here, across at the bottom, RSI at the top, good indication for an uptrend. We will have another indication later on once the stochastic will drop down and will allow us to rejoin this uptrend movement. Australian dollar versus Japanese yen. At the moment, it seems like in terms of structure, we've received an impulse movement climbing up and we've received a choppy overlapping movement dropping down. The potential is an uptrend, but at the moment, the Australian dollar is among the weakest currencies. So, I would definitely stay away from the Australian dollar in front of the Japanese yen, but still, once the Japanese yen will lose strength in front of the Australian dollar, that will imply that the Japanese yen will lose strength in front of other currencies, and we can express that in front of the euro, the Swiss franc, and the pound. As I said, they are the strongest currencies in the market at the moment. Australian dollar versus US dollar, a good potential for a downward movement we had over here. Again, the same perspective, impulse movement dropping down, choppy overlapping movement climbing up, stochastic. RSI is not in the tradable area, so we couldn't use this potential. But again, I do believe that once we'll see the US dollar getting into the market, I mean the US market, we will see a bit of weakness on behalf of the dollar itself, and only after that we will see the strength. So leave this chart alone. Do not trade the Australian dollar in front of the US dollar at the moment. Okay, we had another trade on the euro versus Japanese yen. Again, this uptrend was a very nice uptrend across and RSI at the top. Again, generally, I'm expecting the Japanese yen to lose an additional strength in the market. So look for pullbacks in front of strong currencies when you're using the weakness of the Japanese yen today. Again, I'm expecting to see liquidity driven from the announcement of the pound and the US dollar. And under this specific circumstance, I do believe that we will see the charts of the Japanese yen beginning to form a cleaner, a safer position to actually participate in trades like that. We can see that generally trends aren't moving sufficient strongly enough in order for us to use them on our platform. Again, low liquidity is generally the perspective of Mondays, but I do expect to see an additional liquidity driven into the market that will extend the already going correlation between currencies, meaning a strong currency will become a stronger currency and a weaker currency will become a weaker currency. Pound versus the US dollar. You can see very nicely that we're approaching a good potential trade for an uptrend movement. RSI at the top, stochastic dropping down across will give us the approval to participate in this trade. A trend line above the corrective pattern, and even I would advise you to go to 5-minute chart. And again, we've got an announcement in something like 3 hours. I do expect to see this uptrend taking form, crossing the trend line, and then I'll be able to use that. Again, I'm expecting the dollar to lose strength and the pound to gain strength during today's session, and because of that, I see a great potential in this uptrend movement, but only once we'll cross the trend line. Beside that, we've got nothing over here. Let's look at the gold and see how the expression of a weaker dollar was expressed during the non-farm payroll. On Friday, we had, let's look at a 5-minute chart. I'll show you this very nicely. That's a usual effect of the non-farm payroll. We saw that on the dollar index, and we can see the opposite direction on the gold. At the beginning of the non-farm payroll, the dollar gained a lot of strength, causing the gold to drop down. And after that, the dollar lost a lot of strength, which caused the gold to climb up. Now that was a fluctuation level, and I stated before the announcement that a good choice to trade this specific scenario was to use the one-touch instrument. But beside that, we had several good trades of a pullback. Once the gold dropped down, we had a great entry point for an uptrend movement. At the moment, you can see that indeed, while the dollar is fluctuating in the market, not showing a specific position, We can see that the market on the gold is fluctuating as well. Again, my expectation is the stronger gold that will express the weaker dollar in the market. And let's analyze the silver as well. They should show the same perspective. As you can see, approximately the same chart. Again, the fluctuation level of the non-farm payroll, the uptrend and the downtrend, and we have a fluctuation level after that. At the moment, the expectation is an uptrend movement because I'm expecting to see a weaker dollar in the market. That will be the outcome of the announcement from the US market that we're expecting to see. Beside that, on other charts, we've got, as I said, a pretty quiet market. We will have a slow market until the announcement will be delivered. So beside the gold and the silver's potential uptrend movement, I see no potential on other charts, but let's go to the dollar index and let's see how the expectation from the dollar index is forming. Okay. So from the potential that we saw on the chart that I showed at the beginning of the session, we had an impulse 5 wave movement climbing up. We've got an A wave dropping down, a B wave in a choppy overlapping triangle formation, and our expectation is a downtrend that will deliver approximately to 80, something like that will be a good area to see the dollar changing its direction and starting to climb higher. Now, when will I actually analyze the market and reach the conclusion that indeed we've continued higher? Once we'll cross the trend line above this corrective pattern. We've got several trend lines to cross. I believe that the market will fall down, then we'll climb up, bounce below the trend line, cross the trend line, bounce below this trend line, cross the trend line, bounce below this trend line, and cross this trend line again. So we've got a very complex formation coming up. We may see an enormous movement climbing up, but that's not likely because of the circumstance at the moment approaching the Christmas time. I do expect the market to express some fear. Although we will see several good entry points, I'm expecting traders to stay outside of the market, not taking any kind of position at the moment until the holidays until we will have something like 1 or 2 weeks after the holidays, we will see the movement forming in a cleaner structure. But at the moment, I do believe that we will see the market struggling every time that it will reach one of the trend lines until we will see a clean cross and move beyond this area. That completes our session for today. If you've got questions, you've got a great help from your brokers. You'll be able to use their professional experience in the market. And from here, from Opteck, I'd like to wish you all the best with your trades. Have a pleasant day, and bye-bye.